Imagine waking up to find your mortgage payment has increased. Business loans have become more expensive, and headlines everywhere are talking about rising interest rates. You didn't change anything, but suddenly borrowing money costs more. So, who made that decision? And who really controls the value of your money? Welcome to World Pulse, where we explain the stories shaping our future. Understand the world. Behind every modern economy is an institution that most people rarely think about: the central bank. Unlike the banks where you save money or apply for loans, a central bank doesn't serve everyday customers. Instead, it works behind the scenes to help keep the entire financial system stable. Its mission is simple in theory, but incredibly difficult in practice. Keep prices stable, support economic growth, and maintain confidence in the nation's currency. Central banks were created because economies once faced frequent financial panics, unstable currencies, and waves of bank failures that threatened people's savings and businesses. Over time, they became trusted institutions responsible for helping economies remain stable during both prosperous times and periods of crisis. One of the most powerful tools a central bank has is the ability to influence interest rates. When inflation rises too quickly, it may raise interest rates, making borrowing more expensive. As people and businesses spend less, demand slows, helping to ease pressure on prices. When the economy weakens, it can lower interest rates to encourage borrowing, investment, and spending, giving businesses more confidence to expand and create jobs. But controlling an economy is never as simple as flipping a switch. Raise interest rates too much, and economic growth can slow sharply. Keep them too low for too long, and inflation can erode the value of people's savings and make everyday life more expensive. Every decision involves balancing difficult trade-offs, often with no perfect solution. Policymakers must constantly weigh today's economic pressures against tomorrow's long-term stability. These choices don't stay inside financial institutions. They reach into everyday life. They influence the cost of buying a home, financing a car, expanding a business, earning interest on savings, and even the prices you pay for food, fuel, and other essentials. Whether you realize it or not, central bank decisions quietly shape many of the financial choices people make every day. A single change in interest rates can influence millions of households and businesses across an entire country. As the global economy becomes more connected, central banks face even greater challenges, from financial crises and supply chain disruptions to rapid technological change, geopolitical uncertainty, and the emergence of digital currencies. Their role continues to evolve as they respond to new risks that can spread across the world in a matter of days. Yet their ultimate goal remains the same: preserving confidence in the economy while navigating an increasingly uncertain world. The next time you hear that interest rates have changed or inflation is rising, you'll know those headlines are about far more than numbers. They reflect decisions that influence businesses, governments, and millions of lives, including your own. Understanding how central banks work doesn't just help explain the news. It helps explain why your money, your savings, your loans, and your financial future can change even when you haven't changed anything at all. For more documentary-style explainers that make complex global stories easy to understand, subscribe to World Pulse. World Pulse. Understand the world.